they don't yet suggest that the move down, but of course that is what you will do. You'll look in finer detail to find the start of that move down. Now, this data that I've downloaded is not very nice. It hasn't got an open, high, low, close. There we go. So that's a line on close. So for evidence that the move down has started, you of course look at your FLDs and your VTLs, and so now there's quite a picture here of okay, that gets very messy as soon as you add too many of them, but I think you can see there's the FLD. There's the FLD picture. There's what's called a cascade pattern building up very quickly with all cycles, 5-day, 10-day, 20-day, 40, 80, 20 week, and even 40 week is approaching that. The 18-month or 80-week cycle is not playing as part of that cascade pattern, strictly speaking, at the moment. But your FLDs indicate that the market is very, very vulnerable to a sharp move down really very soon. So it's a sort of an indication of vulnerability. How will you know when that move down has started? Well, you will know it as soon as those FLDs begin to be crossed by price. And of course, the price that we're speaking about here is the median price. So let me just take a moment to illustrate this. If I plot a line on median, you can see that median price is that thick orange line, and you can see it's above all those FLDs, and it needs to keep moving up if it's going to avoid crossing them. And it is very soon going to start crossing the 10-day, the 20-day, and the 40-day. It inevitably has to. That's the way the market works, of course, because of cycles. The fact that a cycle is falling doesn't necessarily mean that the market falls. The market could move horizontally while the cycle falls, or it could even be going up slightly while the cycle is falling. It's all a matter of perspective. If it was as simple as when a cycle falls, the price also falls, then there wouldn't be anything for us to do. But as you can see, these FLD lines are all lined up, if you like, in called a cascade pattern. So what we're looking for here is the median price. When it falls below the 10-day FLD, which at present is right up at this level, it's right up here at price. If it falls below the 10-day FLD, then we will get a projection which will probably push it past the 20-day FLD, which will give us a projection to push it past the 40-day FLD. Once it crosses the 40-day FLD, we'll get a projection which will probably push it past the 80-day FLD. And then once it crosses the 80-day FLD, we will create a projection which will push it beyond there. So certainly the market is looking vulnerable for a fall down to the 12,750 level. It's looking vulnerable for that. As that fall plays out, of course, we'll be able to monitor it. But that's in terms of the sort of short-term picture. Right, let me turn those FLDs off, and let me change that to weekly. Okay, so there we go. Right, so that's what this alternative analysis is saying. Let's go back and have a look at the default analysis over the same time period and see what the default analysis is saying. Okay, I'm going to try and select roughly the same time period, and so I think you can see here that although the projection boxes are in a different position, this picture is not very much different. It is a little bit different, but not very much different. Let's have a look at it. Well, again, this is for the 4.5-year cycle, and here you can see the red box for the 4.5-year cycle is projecting that price might still move up a little bit further. However, notice how this red color leaks below the bottom of this box. Okay, that's not a fault in the software. I've had emails suggesting that something's gone wrong because the colors don't stay in the boxes. That's not a fault in the software. That is a way of indicating visually that this upwards projection is expected to be undershot or underachieved. In other words, although in theory we expect to target somewhere up here, which is about the 15,000 level, in theory that's the theoretical target. In fact, that target is expected to be underachieved. So anywhere near to the underside of that box is more likely to be the target. And when a target is expected to be underachieved, we always use, in fact, the bottom line of that box as the actual target instead of the center of the box. So you can see the bottom line of that box is hardly any distance from where we are at the moment. So in fact, again, we're very, very close to achieving this target vertically. But again, it's still a little premature to expect that peak to occur. You can see the boxes were only expected to achieve this target in about a year's time. That's in early 2013. And you can see the trigger lines for the move down into the green box haven't been moved over to this peak yet, because Sentient Trader does consider, according to this default analysis, that the peak that it's too early to see a peak. However, after the peak occurs, it is projecting a move downwards, but in this case to roughly 11,500, so not below the 10,000 level. And again, that trough is expected to occur sometime in late 2014 or 2015. So there are differences with this projection, but the basic picture, if you like, the numbers are slightly different, but the basic picture is pretty much exactly the same. We're expecting the market to peak, whether it's now or whether it's sometime within the next year, and then move down fairly significantly. And so that's the difference with this analysis. Now, I like to let's go back to the alternate analysis that I had Sentient Trader perform. I like to play with the analyses and keep sort of bashing out a few ideas until I come up with a real sense of which analysis I think is perfectly correct. And this analysis bothers me because of the 9-year cycle in October of 2011. I know the theory because I preach it all the time, but I know that that 9 cycle doesn't have to be really prominent. But I have to confess this situation bothers me slightly. The fact that the March 2009 cycle was a trough of only the 18-month cycle, and October 2011 the 9-year cycle. There's something that just doesn't sit quite right as far as I'm concerned. So I got Sentient Trader to perform another analysis and change its opinion yet again. There are a few subtle changes in this analysis, but the most important of them we can see if we zoom in here and have a look at what I've had Sentient Trader do right at the end. And I know there are some purists out there who will who might have their doubts about this particular analysis, but basically what I've done, as you can see, is I've said let's resolve the situation and let's just say that the 2009 March trough was the trough of the 9-year cycle and not October 2011. Okay, if that's the case, then in fact we get a straddled 4.5-year cycle trough, not in August of 2007, which is the analysis that we've been working with for years actually, but in fact that 4.5-year cycle trough occurred a lot earlier and occurred way back in August of 2005, 2 years earlier. There are pros and cons to this particular analysis. And I'm not yet convinced about it. Perhaps this is for me the greatest feature of trading using Hurst's cyclic principles. Again, the theory is really very robust, because even if you assume that this analysis is correct, let's take a look at what's happening. What's happening now? What is this analysis telling us is going to happen in the near term? in the market. Let me just capture that. I just want to get those trigger lines. There we go. Okay, and so here we go. As I think you can see, the projection for the current 4.5-year cycle is very little different to the previous two, and particularly to that first one we looked at, which was my alternate analysis. As you can see, the market is expected to rise from the 4.5-year cycle trough into this red projection box over here. Notice that the color red is extending below that projection box, which means that the actual target is the bottom of the box, okay? And if we draw the bottom of the box there, the actual target is 13,050 something. Okay? In fact, we can get Sentient Trader to tell us exactly what it is in a moment. So that indicates that in terms of price, according to this analysis as well, the target price has been achieved. Okay? It is also still a little bit early. Okay, this target price is only expected to be, the peak is only expected to occur within about 6 months. However, the principle of variation applies particularly in terms of time of cycles, and particularly in terms of the timing of the peaks. The timing of the troughs varies, of course, but peaks are very, very variable. So one should never take the fact that it's early for a peak as too much reason to reject a particular analysis. As you can see, Sentient Trader has moved those trigger lines over to this peak in the market over here. The peak, which potentially has not actually occurred yet, but might be occurring. It might even be occurring as we speak. I don't know. But Sentient Trader is saying that basically this could be the peak that we've been expecting. Okay, after which price is expected to move down. Down to what sort of level? Well, according to this analysis, it's expected to move down to approximately the 10,000 mark. Okay, so in terms of the long-term picture, I think one of these three analyses is certainly playing out. I personally believe that the second analysis that I presented to you is most likely to be the actual analysis that is taking place. I love discussing these things, so if you have ideas of your own, please post them to the forum or send them to us. But as I hope you can see, it doesn't really matter which of these particular analyses is playing out. The fact is we are expecting a peak of pretty much the 54-year cycle to occur really fairly soon, according to this long-term picture we're looking at, and then we're looking at a pretty nasty price fall downwards. I see a comment from William. That analysis matches the output of Hurst's filters. Okay, that's really interesting to hear, and I did see, I think it was an email from you, William, about your use of Hurst filters. Hurst filters are a really interesting subject, and something that would be very interesting to chat about one day in Trade Chat. We don't really have time for it today, obviously, but be very interesting to compare the output of Hurst filters. Hurst filters are more of a mathematical approach to filtering cyclic data, as I understand it, from the market, which give you a much more accurate idea of what cycles are presently playing out in the market. Whereas, as you know, Sentient Trader's approach is more of the approach presented in Hurst Cycles course, which allows for the market, the cycles to breathe, and the exactly perfectly accurate definition of a cycle length is less important. But it's certainly very interesting to explore the relationship between the two. Now, having presented three possible alternative analyses, I see Dave saying if the target is 10,000, why does the green box extend to approximately 8,000? Dave, what happens is that Sentient Trader uses the information it has available to it in terms of defining the cycles to create a range, both in terms of price and time. One of the fundamental principles of Hurst cyclic theory is the principle of variation, which applies to both amplitude and wavelength of the cycles. So the cycles are constantly varying. The markets are almost like living, breathing entities, and so cycles are never exact. And what happens initially, before any FLD lines or VTL lines have been crossed, is that that range will be fairly